financial reflections and projections, Elon's ousting, and the keys to riches, along with special guest co host Jim Woods on this episode of Unlock Your Wealth Today, Your Life Fully Invested. Welcome to Unlock Your Wealth Today, Your Life Fully Invested. I'm your purveyor of prosperity and host, Heather Wagenhals, and I'm making success simple on today's episode with some amazing topics and special guest co-host and market analyst, Jim Woods. So let's get started, shall we? Jim, welcome back to Unlock Your Wealth Today.
Thank you, Heather. Pleasure to be here. Honored to be the first guest of the new season. Congratulations.
Thank you. Thank you. So season 2 is alive and well. And thanks to your participation, the last season, we talked about FreedomFest. We broadcast from FreedomFest. It was pretty exciting. And we covered a lot in that last show.
Yeah, I look back on it and a lot of interesting prognostications came true and some didn't. So
yes, we have so much to talk about based on what we had our conversation last time. So let's just jump right in, shall we? So we had just started the third quarter and we had just finished and wrapped up. You were looking at earnings, and specifically you were talking about bank stocks. Can you remember back what you were talking about, how earnings came out then?
I remember that. We talked about bank stocks, and we talked about earnings for bank stocks. And at that point, the bank stocks had come out with some pretty strong numbers, and it kind of verified my bullishness on bank stocks. Bank stocks went up pretty nicely in July, right? For the weeks following my kind of positive bank call, as it were. So I was happy with that. We did see some slack in those stocks, however, and throughout the quarter. I think bank stocks ended up about 4.5–5%, basically, or financials in general, not necessarily bank stocks, but financials at large, ended up about 5% or so higher for the quarter. But there was a significant pullback in September, and a lot of that had to do with late September, and a lot of that was primarily fueled by the Federal Reserve and some comments by Fed Chair Powell about inflation and interest rates. So it was a good news, bad news kind of thing for banks. I'm still quite bullish on that sector, although it hasn't lived up to my expectations so far in 2018. I am bullish on that sector though. So despite the not despite higher yields, but despite the fact that we haven't seen yields go crazy high yet. So that would help banks' profit margins. So
now the Fed said that they were probably going to taper off with rate hikes by the new year. Do you still see that as
no, they did not say that, actually. That's what some people in the mainstream media interpret it as, but I do not think there's anything. The only thing that they removed the term called accommodative from their FOMC statement.
That was
it. Yeah, and a lot of people said that a lot of people think that somehow that means they're going to slow down on rate hikes. And I do think long term that is the case, but there's still going to be, I still suspect a rate hike in December. I also do expect at least 3 rate hikes in 2019, although 2019 projections in the Fed at this point, I wouldn't put much credence in them. They're revising every quarter, and depending on what economic data says, and depending on what the markets do, and depending on elections and things like that, there's going to be an alteration to that 2019 3 rate hike projection, most likely. But if economic growth continues to be strong, which it has been, and the economy continues to be strong and inflation continues to go, it's at a slow pace right now, but if it starts to ramp up a little bit, then they're going to hike. So I don't think one should bet on on interest rates continuing to stay where they are. I think they're going to go up.
So did the market respond at all to the removal of accommodative?
I mean, the initial reaction on that day that it happened was a sell-off in stocks. So people kind of got worried, but that was, I think, more just a sell the news kind of thing. I mean, since then, the market has been up strong, and just yesterday and today we've made new highs, all-time highs. Dow's up about 300 points in the last 2 days. So a lot of that, of course, has to do with the other big factor in markets right now. The biggest factor in markets beside the Fed, which is the trade situation, the trade war talks. Now, trade has been the biggest headwind on markets for the last, say, year or so. Even though markets have continued to power higher, anytime there has been any kind of negative trade news, the market has sold off. And rightly so, because a trade war would be horrendous for the country and for the stock market. It would have a terrible effect on corporate profits. But compared to where we were when we last talked, we've had progress in trade with the U.S. and Europe, progress with trade in the U.S. and Mexico, and then just most recently an agreement between the U.S. and Canada on trade. So there's only, when we started the quarter, there was 4 possible hotspots on trade: Europe, Mexico, Canada, and of course China, which is the biggest one. But 3 of those 4 trade uncertainties are now certain. Or now we've now got a situation in place that's quite positive, actually, better than I thought it would be. So now the only unknown is the China situation, and that's actually materially improved as well, because recent trade talks, even though there has been tariffs, they were a little smaller than than we expected them to be. They were like 10% on 200 billion worth of imports. Now it was supposed to be 25%, or that's what all of us thought it might be, 25%. So we've got incremental improvement there as well, and we're hopefully, market bulls are hoping that trade situation gets put on the in the known section of the market, so that we can continue and look at what really matters, which is economic growth, earnings, and getting past the one thing that actually could also harm markets, which is the political intrigue in Washington, which seems to be getting worse every moment. So.
Yeah, and which is kind of funny, because we talked about what was going on in the justice side of the politics, and we were actually focusing on financial concerns with regard to our justice appointment, and that's what you had brought up when we were talking Kavanaugh before, and that you were more concerned about his disclosure about the high level of personal debt. That seems to be the least of his worries now.
Yeah, that's, if only that was the issue confronting the country is Brett Kavanaugh's excessive loan situation. Well, unfortunately, that's not the case, and there's been a firestorm. Well, everybody knows about this, and I think the whole thing, no matter what side of the issue you're on, I think the whole thing is quite unfortunate for the country. You have a situation where accusations can derail someone's life, someone's career, uncorroborated, at least at this point, accusations. And then you have a situation where someone comes out and, aggressively defends his innocence in a not too judicial manner, in my opinion. But of course, if I was in his shoes, I might be doing the same kind of, reacting the same way. So the whole thing is unfortunate. It's all politics to begin with, because if somehow Kavanaugh moderated his stance on the Second Amendment, or moderated as a stance on the constitutional primacy of law, you would get a lot more people on the left side of the aisle embracing him, regardless of this whole situation. So, but
from a kind of macro perspective, we've seen a lot with this presidency. It's creating a lot of dissent. I think about 9/11 was very healing. We became, that melting pot that you and I were taught when we were in school. When we were small, it was about being a melting pot, and then we went into this movement of diversity. And how big of an impact does all of this tribalism have within our country? Does it impact the economy at all? Is it something we should be concerned with as we watch this play out on a national stage?
Yeah, that's a great question. I don't think from a direct kind of investment perspective that it has a direct impact, at least in the short term. But certainly, if there's any kind of serious political strife, like kind of late 1960s kind of political strife, or 70s kind of impeachment type of strife, that's going to weigh on markets. And it's actually one of the things that I think is, I mean, the markets are one thing, and that's not going to be good for investors. But what bigger than that, I mean, it's just going to be unfortunate for a country that's built on reason, the only country that's founded on reason, individual rights. I mean, we all have individual rights to protest, and I have no problem with that. But when people are looking at one issue with two distinct set of facts, like what seems to be going on right now, that's when you have strife that's never going to be taken away.
Well, that's challenging for sure. When we get back, I would love to talk about what's going on with Tesla and Elon, because at Freedom Fest, you moderated a Tesla debate. And I'd love to switch gears and talk about that. You are listening to my co-host, Jim Woods. I'm Heather Wagenhals, and you're watching Unlock Your Wealth Today. Stay tuned for more right after this. Welcome back to Unlock Your Wealth Today. I'm your purveyor of prosperity and host, Heather Wagenhals, and we are joined by our season kickoff guest co-host, market analyst Jim Woods. And we just had a really great discussion about the economy and what our projections were from Freedom Fest. And now that we're all caught up, one other thing that happened at Freedom Fest is you moderated a debate between your good friend Keith Fitzgerald and I believe it was Rob Arnott on the Tesla stock. And yeah, so let's talk about what you were thinking about then,
yes,
because there's been so much news, and then kind of let's get caught up with what your thoughts were back then, and let's fast forward and talk about what all of the recent news means.
Right. Well, since that July event, that debate, there has been quite a bit of news on Tesla. It's been a whirlwind for Elon Musk and company. Most of it's self-inflicted, and it was quite a bizarre kind of tweet that started this whole thing. He said he was going to take Tesla private at a price of $420. Now, later, I found out, which is just a few days ago, that 420 number was kind of a idiosyncratic reference to something, at least to marijuana usage, and then most famously, he was on the Joe Rogan podcast, and he actually did smoke marijuana with Joe Rogan. And I have no problem with legal substances and how they're used, but a lot of people did have a big problem with it in terms of his kind of appropriateness, shall we say. But the bigger issue, of course, was that that Elon Musk basically violated some SEC regulations in saying that he had funding and he was considering going public without any kind of due diligence from the corporate board or anything like that. He kind of just made a statement. And the SEC came in there and said, hey, you can't just make statements like this. He knew that he was not going to win that fight, or if he was going to win it, it would take a long time and a lot of money. So he agreed on a settlement with the SEC, $20 million fine, and that he would not be on the board, or no longer continue to be chairman of the board. He will continue to be CEO. So all of this has caused a crazy kind of whirlwind in Tesla shares. and they were up as high as like 380, something like that, 370, I believe, earlier this year, right after that debate in early August. And then the shares went down to like 270 and 260, I think. Now they're about 300 a share. And if you have if it's one of those things where if you're a Tesla shareholder, you've been through the ringer these last few months. I am not a Tesla shareholder at the moment. Although I like the company, I like the stock. I'm a very big Elon Musk fan. I think the guy's a brilliant genius, and I think that he does more in a week than most people will do in their life. And I just admire his genius. I admire his vision. But sometimes, that doesn't go hand in hand with daily operations of a company, or sometimes an eccentric person can be part of their eccentricity that would lead them to be able to do something as good as he's done can also harm them. So we'll see what happens in the next few months. It'll be interesting to watch Tesla. I mean, the real kind of rubber meets the road, no pun intended, is how many cars can get out there, how many Model 3s, if you can meet production, if they can meet sales goals. That's going to be the main thing. And maybe if they have a kind of more focused approach to on their board to getting these things done, might help them actually.
So they did take him off as chairman, but left him as CEO. So do you think that that's going to have a positive impact, or is that going to create more uncertainty in the marketplace?
No, I mean, it's not. It so far remains to be seen, because we don't know who the chairman's going to be. We don't know what the structure is going to be. It could be someone. If it's someone that's kind of a hand-picked Elon Musk person, then the market might not like that as much. If it's somebody who's more independent, someone who's got some gravitas either in the auto industry or in the tech field, that could be a helpful sign of stability. So it's a little bit too early to tell, I'd say, as far as the impact. The market liked the idea that there was a deal with the SEC, so that cloud of uncertainty is now removed. And one thing you must know about markets, everyone should know, is the worst thing you can have something that's bad, but if you know it's bad, you plan for it. Or you can have something great, and if you know it's great, you can plan for it. But if it's uncertain, if no one knows exactly what's going to happen, that's the thing that Wall Street hates the most. So uncertainty is the biggest enemy of stock price gains. And so right now, we'll see. I mean, this stock, let's put it this way, this stock is not for the faint of heart. So if you're going to go into Tesla, or if you've been in Tesla, just continue to be ready to ride that roller coaster.
So where are you with regard to Tesla? Is the price at a reasonable level to start getting back into it?
No, I would not be looking to get back into the shares if I did not own them. I'm not looking for that. The thing that drives up stock prices mostly is earnings. Tesla has no earnings. And of course, if you were waiting for earnings for Tesla, you would have missed the run up, since their early days, since they went public. So it's never been an earnings oriented kind of play. It's always been a visionary play. And Elon Musk has been the visionary. Well, now you have a lot of doubts about Elon Musk in terms of his kind of suitability as a leader of the company going forward. I personally don't think there's any issues with his leadership in terms of the grand scheme of things. But in terms of me buying the stock, I think there's a lot of other good stocks out there that one could be looking at.
Speaking of that, you had made a recommendation on another technology play when we were talking about how to invest like a Renaissance man. And you had mentioned FDN was the stock symbol. And so tell us about what that is and what's happened since you talked about it on the show.
Sure. I mean, the FDN is the First Trust Dow Jones Internet Index Fund. It's kind of it's an exchange traded fund that holds all of the large cap FANG stocks, Facebook, Amazon, Netflix, Google, all of the big names that you have that are Apple, that are running that are kind of have led the market charge higher for the last couple of years. These are the stocks that you get all in this one ETF. So if you're looking, I like that play a few months ago. Now, what interestingly, that sector actually did not do well in July. It had a little summer sell-off. I think there was a rotation out of technology as being popular, and part of that was things like Facebook's big decline in the middle of that, later that month in July. They had the whole thing with the hearings, congressional hearings, and they brought Mark Zuckerberg up on the hearings. That whole thing with the spying and the Cambridge analytical scandal, that hurt the stock a lot. So that brought down the FDN fairly strongly in July. But then once those kind of fears cleared, there was about an 8% run up in August. So we saw a big move higher in August. September was pretty much of a flat month, a little down. So over the last 3 months or so, we're about flat in that segment. But over the past 9 months, leading up to year to date, basically, we're still up 27% in that fund. So it's still been a big market leader, and it's still something that if you were looking to put money to work, I still like that sector quite a bit.
So, well, while we're on this Facebook topic, as an identity theft risk management specialist, I've been interviewed quite a bit this week about this new data breach and the 50 million accounts that were made vulnerable. What's going on with Facebook now? Where's the stock? Is this being affected by this? Because this is big. People's privacy. There's potential fines from the European Union with this new GDPR legislation that they have. The fines are affordable from a financial standpoint. That the fines aren't going to kill Facebook, but what's it doing to investor confidence?
Yeah, it's definitely not good for investor confidence. This week alone, I think the last 3 days, we've seen about a 6 or 7% drop in Facebook shares. And Facebook has not been a good stock this year. It's down almost 10% year to date. So people have this idea that Facebook is really killing it, and it was for several years. If you go back, if you look at the data for Facebook for say like the last 3 years, it's up almost 70%. If you look at it this year, though, it's down 10%. So, these things happen. It's definitely come off its peak, and it's there when you have these data breach scandals, when you have these issues with privacy, when you have these issues with Russian bots and election influences and things like that. That's all a negative for Facebook. But Facebook earnings numbers are still very strong. So, if you're, I wouldn't bet against Facebook in the long term. Although I wouldn't actually be looking to buy this dip in any real way in the short term. But if you're a long term investor, then it might be a good idea. It depends on your time frame with any of these stocks. So that's always the case.
Well, and we haven't really talked about your Way of the Renaissance Man project at all, although I'm always talking about it on every episode, it seems. But what I like about what you just said right now because you separated the morass of negative publicity and talked about what people forget to look at when they're an investor and that is the earnings are still there.
Yeah, the earnings are still there. Now, one thing about Facebook that and one of the other reasons why the stock went down back in July is because the company came out and said that their new tools, the new kind of business practices could actually have a material effect on their revenue down the road. Now, that is not a good thing to hear from a company. You do not want to hear a company say this new way of doing business is going to actually negatively affect our bottom line going forward, but it's going to help, our public image or it's going to help protect customer base, things like that. As an investor, you want the thing that you want them to keep doing the thing that's going to get them the most revenue, therefore the most earnings. And that's still the most important ingredient. But it's definitely a transition kind of phase for Facebook and for a lot of these social media companies because they're trying to balance, their social or not social profile, but their societal profile along with their bottom line. So it's going to be kind of tricky for a while, but like I said, I would not bet against them in the long run because people still use that platform, and people still, anybody has an online business or has any kind of an online project like you mentioned, my project, Where the Renaissance Man, that we use Facebook all the time. We use Twitter, which we use Instagram. All these things are social media things are critical to our ongoing success. So, and we're one of many thousands and probably literally hundreds of thousands of operations that do such a thing. So, it's there to stay, definitely.
Well, I'm excited, because I'm a business user of Facebook. I buy a lot of ads for a variety of my companies, and some of the new tools that they've rolled out are pretty exciting. And to be able to do some of the things that you can do to really target your influence, it's been pretty awesome. But I brought up the Renaissance Man because that's the thing that a Renaissance man does well. He goes deep in many areas of his life, and by being able to continually not just listen to the chitter, the chit chat on any stock, but to be able to actually look deep and say, you know what, I'm not going to be affected by just what the media hype is. I need to look and see if there's any credence to what's going on in the marketplace, because when I ever see a stock dip and I do my research, I look at it like, okay, well, it's a time to go. It's like a coupon. I just got like a discount coupon, and I'm thinking it's time to go shopping when everybody else is panicking, So that's one of my criteria is like, oh, okay, so it's okay for me if stuff wants, if people want to go like, oh, but it's all terrible over here, but yeah, but it just over here it might be, but right here it's probably pretty good. And so I kind of have a different look, I think, the way, or I guess I have more confidence in the market because I've been in the markets for so long.
Yeah, I mean, that's a good approach. I think one of the things that you have to keep in mind when you're investing is, I mentioned it a couple of times, your time frame on these things. If you're a short-term trader, you're going to be rolling the dice with a stock like Tesla right now. If you're a long-term investor, a stock like Facebook is something you might want to say, hey, look, this is on sale because I know I'm going to have it for the next 5 years, and I'm going to have it for the next 10 years. We don't even know if Tesla's going to be around in 5 years. So there's a very good possibility it won't be, or at least not in its current form. So this is the kind of unknown that you have to take into account when you're investing. And it's not an easy thing because you do want to track the kind of the news element to it and the rumors and what possibly is coming down, but you also have to track the fundamentals and the actual numbers and the marketplace and what the economy is doing and what kind of growth potential that certain places have. And you have limited amount of funds, so you can only invest in a certain thing no matter how much money you have. So you want to try to make sure that you have the best possible metrics on your side, and you don't want to just kind of be the guy that rolls the dice all the time. Although certain times it's it pays off big to get to roll the dice. So it's not an easy thing, but it's something that we all enjoy. Or at least I enjoy trying to figure out how to help investors with.
Well, and that's one of the pieces of your invest like a Renaissance man was to have a plan, and so to keep measuring against, well, what is my plan? So you developed, I think, that intestinal fortitude over time. When it's different once you've been investing for a while, but when you first start out, sticking to that plan, knowing what your ins and outs are. Am I a short-term or a long-term investor? And for those of you that missed last season's episode with my co-host today, Jim Woods, all you have to do is visit our website at unlockyourwealthtoday.com to view past episodes. And I encourage you to do so because you will learn all the techniques that Jim shares in his keynote on how to invest like a Renaissance man, which actually I think you're giving it this weekend, aren't you, at the Dallas Money Show. So visit the show page for today's show and you'll be able to get the links to see where he's speaking next. Now, coming up, we have our fourth quarter projections and this week's key in the Keys to Riches financial philosophy. And for my co-host, Jim Woods, I'm Heather Wagenhals. Stay tuned for more Unlock Your Wealth Today right after this. Welcome back to Unlock Your Wealth today, and we are in our season kickoff. I'm Heather Wagenhals, and my co-host Jim Woods has been sharing this time with us today. Thanks for being a part of the show. It's been good catching up.
Yes, my pleasure. Thank you, Heather.
So we've covered so much about the economy and the different things that we talked about last time. Let's address what's coming ahead for the fourth quarter and what kind of projections do you have?
Well, I expect the fourth quarter to be another good one. I don't know if it's going to be quite as good as a third quarter, and simply because historically speaking, September and October are kind of difficult months for the major market indices. But December, on the other hand, is a strong month. Part of that is because of traditional, what they call the Santa Claus rally and consumer spending in the retail segment. And that's one of the areas that I think that's going to do really well. Retail has been an under kind of appreciated sector. I mean, it's done quite well this year. And if you are in retail stocks this year, especially the right ones, or even just in a retail exchange traded fund, you've done really well. So I expect that to continue being strong. I think that we're going to start to get a read on third quarter earnings around the sometime next week is when earnings season starts. It'll really kick into gear like around the end of October. So that's going to give us a sense of whether the economy is continuing to hum and whether the key companies continue to perform the way they've been. It's been a really strong third quarter. The third quarter, at least the companies that reported in the third quarter, something like 80% of them beat estimates. And according to FactSet, which is a research firm in the industry, that's the best it's ever been. So we're talking about record strong earnings growth and record strong estimate beating on corporate bottom line. So if we see anything close to that, we're going to see continued stock prices rise. Now, there are a couple of things I'm worried about in the fourth quarter. I mentioned the trade situation. If the trade situation with China deteriorates, that could be a big problem for stocks. Although at this point, the market's kind of put that on the back burner until later in the quarter. So I don't think we have to worry about it right now, but it's always going to be a worry because the trade war thing is a big thing, big potential negative. Then the other thing that that's out there looming is the midterm elections and the whole Mueller investigation and possibility of some kind of changing of hands of Congress to Democratic control. And if there's some kind of a report that suggests that the president is somehow worthy of impeachment and the Democrats start doing anything like that, then we could see I don't think that would not be something that the markets could shake off, and we'd see some serious damage, I think, to markets. So that's the one outlier that could be a problem. And normally that wouldn't be a problem if we had ended up having divided government in the midterms. No problem. I mean, Wall Street likes divided government because Wall Street likes gridlock. And that means no more laws and less stuff to mess with us, so to speak, less uncertainty.
Yes, we don't like regulation.
Yeah, the less new things we have to deal with, the better coming from Washington. So we'll have to see, but that's the one thing that definitely could hurt markets. But I at this point, it's not something that most people are worried about in any kind of real situation because we just don't know what's going on right now with investigations and with how the election is going to play out. It's going to be close either way, and so But so that's what I'm looking for. That's what I'll be watching. Be watching to make sure that economic growth continues and making sure that these earnings continue to be strong, because those are the two pillars that have held up this market for all the last year and a half, 2 years. So if that keeps on going, there's no reason to think that people aren't going to continue to buy stocks.
Well, good. Then that's optimistic for us.
Yes, definitely.
Outstanding. Well, so I have to ask you, because I've been staring at it the whole show. You have it's one of my favorite colors is a blue shirt on, but it says believe there's good in the world, and then it's kind of highlighted be the good. It's kind of this really like double message. What's the shirt? Because you're casual today. You know, you were in a
Yeah,
suit the last time.
no suit today. Well, this is a shirt that I got from an organization called Lifestream. It's a blood bank here where I live in Southern California. I'm a regular donor to this blood bank. I try to go as frequently as I can, every 8 to 10 weeks. I think it's really important. If you've ever had anyone, a relative or yourself or anyone who needed blood, you have a rare blood type like I do, then you appreciate the fact that we have blood banks, that we have people that are generous enough to go and donate their blood, and there's no replacement for it. So if you can, be the good and go out and donate blood. It doesn't cost you anything except for a little bit of time, and you'll make that up, more than make that up, in the sense of psychic satisfaction and that you get. I guarantee it.
I was blood drive chairman for 3 years when I was in high school, and I can't second that even more. I'm a universal donor, being an O, but we can only have O, so it's always a challenge to make sure that there's blood available. So thanks for sharing that. That's really
Sure.
cool, and I really like that color of that shirt. It looks good on you. So we're almost done with the show. We have to mention that we are in our first key in our Keys to Riches financial philosophy. And for those of you who aren't familiar with the Keys to Riches, it's a baker's dozen of financial concepts that teach you how to think like the rich and be in control of your own money. It also gives you specific techniques to create or fix your credit, eliminate debt, save and invest, all while transforming your current financial habits into healthy money management skills. And every week on Monday on Facebook and Instagram, we do a live broadcast where we feature the key of the week and we really talk about it in its entirety. And this week's key, and the first key in the series, is acceptance and affirmation. And Jim, you said that you mentioned that you had a chance to take and watch the show and learn about this week's key. Is that right? Acceptance and affirmation?
Yeah, I really liked both of those concepts, because one of the things you mentioned is that the acceptance part of your situation, or whatever if you have a company or a relationship or a family situation or financial situation, you have to just accept the fact that reality is what it is. I mean, there's no way you can change anything in life unless you accept the fact that what is. A is one of our kind of favorite proclamations, and the reality exists independent of whether you want it to be that way or not. So just wishing something to be different is not going to change the fact that it is. So until you actually look at the facts, realize that this is where you're at and this is what you need to first you need to realize where you're at and what things are. Then you can go about making changes, doing things. If you don't like what you see, or if you want to improve what you see, which we all do, then you take steps necessary to do that. But you got to really be realistic and assess where you're at that moment. Now, the other thing that I really liked about the show is the what you call the affirmation aspect, because we're constantly telling ourselves what we are in our own minds. And this can be a big problem, or it can be one of the biggest assets that you have in life. I mean, if you're constantly succumbing to negative chatter in your mind, and even if most people don't even really pay attention to the chatter in their mind, in the sense that they know what's going on. It's just the thing that's going on in their mind. And most of the time it's negative. And for those people that are kind of succumbing to negative chatter, and we all have this issue. I mean, we all have these things in our head, this problem, that problem, we have to deal with this, we have to deal with that. It's difficult to do that. But if you can realize that it's just your mind kind of on autopilot, these thoughts going through your head, if you could sit back and kind of relax and identify these things and train your mind in order to identify these things, and start giving yourself positive affirmations, start understanding that you have good qualities, you are able to kind of think these things through, and that the reality of the situation is you are able to affect your situation, these are what you called positive affirmations. And it's not something like looking into a mirror saying, hey, I'm great today or anything like that. Although there's nothing wrong with that if that's something that you want to do. It's not necessarily has to be anything that like overt, but it's just learning how to identify the negative thoughts and not succumbing to them. That's the first thing. And then you can supplant that with positive affirmations on things like, I'm capable of doing this. I mean, it's everybody that I don't know about you, Heather, but like the people that I know that are most successful, they look at a problem and they don't go, oh my God, there's a problem. They look at a problem, they go, you know what, I think that we could solve it by doing the following things. And that is just the difference between a positive person and a person that succumbs to the negative. And I mean, and how many, basically anybody who's achieved anything in life has done so by solving one of society's needs, one of society's problems. So if you can do that, if you look at things like that, you can certainly fix your own life, at least as much as you can apply that to your the problems and or situation that you have. So I'm a big believer in problem solving and being positive on these fronts that just also the fact that if you have a kind of a mindset that is a problem solving and a thriving on putting your mind to work and solving problems and coming up with creative solutions, you're going to be a creative person that does good things and you're going to be happier. And that's what we all want anyway. You're
like an A student after one class. That's awesome. That's amazing. I have nothing left to say. You did a phenomenal job. Other than my forthcoming book will have 8 P's from our usual 6 P's for affirmation success. So we'll look forward to that at the beginning of the year. Now, you have shared an amazing wealth of information today, a huge body of information for our viewers. Now, you have all kinds of things. In addition to the Where the Renaissance Man Project, you have newsletters that give people specific advice on investing. If folks want to learn more and become a student of Jim Wood's investing, how do they go about doing that?
Well, it's very simple, Heather. Just go to jimwoodsinvesting.com and you can find out about all my different newsletters. And you can sign up for the free e-letter. It's called The Deep Woods. And I would strongly recommend everyone do that. We just need to sign up for it. It's completely free. And then, of course, there's the wayoftherenaissanceman.com, which is my passion project that I'm very fortunate enough to have a great staff helping me with. And that's something I hope everyone checks out as well. And then watch your show too. I mean, they're going to get a lot out of that, just doing those 3 things. So.
Well, thank you. And wow, it's been so incredible. You've shared so much information with us. Thank you for being a part of the show. I can't believe how time has flown. And hey, can we make a commitment to check in next year?
Definitely.
Okay, great. Well, thanks again for being a part of the show. And for those of you without a pencil, never fear, unlockyourwealthtoday.com is here, where you can visit Jim's show page, get the links to all of his resources, and so much more. For the maestro of Moolah, Michael Terry, and my guest co-host, market analyst, Jim Woods, I'm Heather Wagenhals. Now go out and unlock your wealth today.
UnlockYourWealthToday.com is produced by Heather Wagenhals and the Unlock Your Wealth Foundation. UnlockYourWealthToday.com and its affiliates are copyrighted 2018 with all rights reserved. For more information on the Keys to Riches Financial Wellness Series, please visit our website at www.unlockyourwealthtoday.com.